This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices slipped on Thursday as investors digested that the U.S. Federal Reserve had likely pushed back an interest rate cut to December and ASUS. Crude and fuel stocks rose. Brent crude futures was down 43 cents, or 0.5%, to $82.17 a barrel by 09:02 GMT. West Texas Intermediate U.S. crude futures fell 46 cents, or 0.6%, to $78.04. Both benchmarks had gained nearly 1% in the previous session. The Fed held rates steady on Wednesday and pushed out the start of policy easing to perhaps as late as December. In the Fed's view, this is the price that needs to be paid to achieve a soft landing and avoid recession beyond doubt, PVM oil analyst Thomas Varga said.
The nation's largest oil trade group, which includes ExxonMobil and Chevron, will file a federal lawsuit on Thursday seeking to block the Biden administration's efforts to reduce planet warming emissions from cars and light trucks and encourage electric vehicle manufacturing, the group said. The U.S. Environmental Protection Agency issued new tailpipe emission rules in March that will force the nation's automakers to produce and sell more electric vehicles to meet the new standards. Under the rule, the administration projects up to 56% of all car sales will be electric between 2030 and 2032. The American Petroleum Institute says the EPA has exceeded its congressional authority with a regulation that will eliminate most new gas cars and traditional hybrids from the U.S. market in less than a decade.
Moving on to the top news in the energy sector.
India wants to reduce coal imports and increase domestic production, Federal Coal Minister G. Kishan Reddy said on Thursday. The country, the world's second-largest consumer of coal, imported 176 million tons of thermal coal in 2023, Reuters reported earlier in the year. Imports are expected to not go beyond 160 million tons in 2024, Rajat Handa, vice president of international trade at a coal importing firm Agarwal Coal, told Reuters in February.
Singapore is offering refiners and petrochemical companies rebates of up to 76% for its planned carbon tax for 2024 and 2025 to help them ease cost stress and remain competitive versus rivals elsewhere. Four sources familiar with the matter said. The tax concessions will provide a significant buffer for refiners' profit margins amid growing competition with newer plants in China and the Middle East. Carbon tax costs are estimated at between 80 cents and $1 per barrel of crude input basis for refineries based on the $25 per ton of emission rate, according to consulting firms FGE and Wood Mackenzie. That would be close to a quarter of refiners' current margins in Singapore. Next, we have the top news in metal markets. Iron ore futures prices ticked up on Thursday, helped by Beijing's latest move to revive its struggling property sector. Although lackluster near-term demand and persistently high portside stocks in top consumer China capped gains. The most traded September iron ore contract on China's Dalian Commodity Exchange ended daytime trade 0.93% higher at 817 yuan, $112.67, a metric ton. China's central bank on Wednesday held a meeting to promote its financial support for affordable housing in a bid to accelerate sales of unsold housing stock, the latest effort to revive the embattled property sector.
Zambia will set up a new entity for investment and trading in minerals as it seeks to earn more from its natural resources, the cabinet said on Wednesday after giving its approval. The government of Zambia, Africa's second-largest copper producer which currently owns several mining assets through ZCCM Investment Holdings, will establish a special-purpose vehicle for investment and trading purposes, it said. The new entity would help Zambia move away from the dividend payment model for mineral resources and adopt a production-based sharing mechanism to ensure benefits accrue to the people of Zambia beyond statutory obligations, the cabinet said.
We will now look at the top news in the agricultural sector.
Chicago wheat and corn futures were trading slightly higher on Thursday after the U.S. Department of Agriculture, USDA, cut its forecast on global grains and soy end stocks in 2024-2025 from its estimate in May. Corn extended gains for a second day and wheat recouped losses from the previous session, while soybeans extended their downward trend. With the USDA releases not offering any major surprises, grains prices expected to remain under pressure. All eyes will be on the June 28 acreage numbers and Russian weather outlook for the next fortnight, a Vietnam-based trader said. That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.